via Skype from Lagos Island, the Director General of the Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf. Dr. Muda Yusuf, it's great to have you join us on the show this afternoon.
Thank you very much and good afternoon.
DG, how did this come to you? The central bank had to call for an emergency press conference yesterday, reading out all of this to try to mitigate or manage, whichever way you like to put it, the effects of the coronavirus on the Nigerian economy.
Well, I believe the move by the Central Bank of Nigeria is a good move, it's commendable, because I believe that at the enterprise level, it will have some positive impact, especially on enterprises or companies that are already enjoying the CBN facility, and those who will also benefit from the 50 billion facility that has just been announced. So it will have some impact, at least at the level of those companies that are benefiting from it. But what is more important at a time like this are things that are of economy-wide effect, things that have systemic effect, because practically all aspects of the Nigerian economy will be affected. Because I heard the CBN talking about companies that will be affected, that the loan should be targeted at companies that will be affected. Practically everybody is affected, both at the level of the companies and at the level of the households. So we should be looking at things that have systemic impact, things that will address macro level challenges that the economy is facing at this time. Monetary policy has its limitations, just as we always know. There are some of the fundamental macroeconomic issues that we are faced with at the moment are not things that monetary policy can fix. We are talking about macroeconomic fundamentals. We are talking about what is happening to reserves, for instance. It has come under pressure. What is happening to the exchange rate, it has also come under pressure. What's happening to our external sector balances, and so on and so forth. All these things have far-reaching implications. What is happening to investors' confidence, investors' sentiments? All these things have a lot to do with what is happening externally, what is happening to the oil price, what is likely to happen to our exchange rate, and so on. So these are much more fundamental issues that are actually at the root of the confidence crisis that we have at the moment. So for whatever it is, what I think we must commend the CBN. Symbolically, it's a very good move. At the enterprise level, it is a very good move, but we should be looking beyond that. We should be looking at how we can deal with macro level issues. We should also be looking at how we can support the public health management agencies, so that the managing the public health challenge that we have now is very important, because our level of preparedness to deal with this challenge at the level of public health management is still suspect. So if the CBN can also support that process, so that we nip all these things in the bud, we strengthen our preventive measures, we strengthen our response strategies on the public health front. That is also very important.
DG, I'm not seeing restrictions at our airports. Yes, we know that a lot of screenings and all of that is on, but some countries have placed bans on some countries that are really infected or battling with this pandemic, and not limiting movements into countries like Nigeria or other countries. But that is not really happening here. What do you think, and what do you think this means for us?
Well, I think we are taking things a bit for granted. I think it is high time that we begin to take such measures. Many countries are already taking such measures, and given our capacity to deal with an outbreak, I think it is high time that we restrict movement, we restrict flights into the country, at least for a period, so that we can see how all of these things pans out generally at the global level. This is the step that many countries are already taking, and I don't think it is out of place. If at a time like this we begin to restrict the kind of flights, the kind of travels that we receive into the country, I think it is high time we do that, because we are taking things too much for granted at a time like this. Because if these things will happen at the level of an outbreak in Nigeria, I'm sure our capacity to deal with it is very, very restricted. It's very, very limited. So preventive measures are much more important. And one key way to prevent these things is also to restrict the travels into the country. So I think it's high time that we take such steps.
Indeed. Let's now look at these interventions of the central bank, agricultural sector, creative sector. We know all of these sectors the central bank has focused on at this time, reducing this intervention rates from 9 to 5%. What direct impact, what inclusiveness do you see this giving us, DG, in direct terms?
Well, it has had some impact for some of our members, for instance, that have benefited from these facilities. I mean, we have been told that it has eased their liquidity, it has brought down their cost of fund. It has created some fiscal space for them to be able to function. Because when you compare this facility, CBN facility, with the normal, the conventional commercial banking, commercial bank facilities, there's a huge lot of difference among them, both in terms of the cost of the funding and in terms of the tenor of the funds. So I think it's something that has had some effects. But in terms of actually diversifying the economy, which the CBN has been struggling to do, unless we deal with variables that are impacting competitiveness, we may not be able to achieve much, which what the current evidence is telling us. Our production capacity, the competitiveness of those who are in production is still very, very weak. And for as long as it is very costly and very difficult to produce in this economy, for so long shall we be grappling with the issues of economic diversification. Production is not competitive in this environment. So throwing money at these things is good, but it's not enough. Just as you say in economics, these things are necessary conditions, but they are not sufficient conditions. We need to deal with issues of competitiveness, which I mean, that is what is needed at a time like this. So that whatever we were importing, we should be able to produce and effectively have what we call the import substitution. We should also be able to position the economy so that you can export what is processed based, of course, on our comparative advantage and competitive advantage. But the challenge with the economy over these decades is that our production competencies and competitiveness is still very weak. And monetary policy alone cannot deal with these issues. So we need to emphasize again that we need to bring a lot from the fiscal side. We need to bring a lot from the policy side to ensure that we strengthen the infrastructure for production in this economy. That is the weakest, that is the biggest challenge that we have. We import too many things. And for as long as the cost of production remains very high, we continue to face the problem of import dependency. So we need to reverse it. And we need to bring all the arsenals of policy on board: fiscal policy, monetary policy, trade policy. I mean, whatever we need to do to ensure that we strengthen competitiveness in this economy is what we need to do. Monetary policy alone, intervention funds alone, cannot fix this problem.
Now, I would say what the fiscal side also needs to do at this time to complement efforts of the monetary side, as you've identified. Lately, we saw the president come up with a committee to check the effects of the same coronavirus. The Minister of Finance, National Planning is part of this committee, GMD of the NNPC, Governor of the Central Bank of Nigeria, Minister of State of Petroleum Resources, all of the key players when it comes to funding, revenue generation, and all of that for the Nigerian economy. What do you expect from this committee?
Well, from all the members of the committees that we have identified, the CBN is the only one that has some resources to throw around, or not to throw around, resources to commit to this problem. The federal government, as it is struggling with revenue. We have a serious revenue challenge with the federal government. So there's a limit to what the federal government can do in terms of new spending or spending to deal with the current problem that we have. What I think the government can do in terms of fiscal side intervention is to holistically look at our policies. We should look at our fiscal policy, we should look at our trade policy, we should look at our tariff regime, we should look at our tax incentives, we should look at our regulatory environment, we should look at our policy environment, we should look at our institutions, so that we can create an environment that will be more conducive for those who want to invest in this economy, those who want to bring in capital into this economy, to do so. That is the best I think the fiscal side can do. We need to look at it holistically. We need to engage the stakeholders in the economy, because this is not a problem, or this is not a challenge that only the public sector can handle. We need to deepen our public-private partnership at this moment. We need to deepen our public-private dialogue at this moment, so that we can bring all the ideas that we need to the table to be able to confront this challenge that we are facing at the moment.
Director General, Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf, thank you very much sharing your thoughts on what we expect the effect of the coronavirus, efforts made by the Central Bank of Nigeria, and of course the federal government to address this ugly trend. Thank you very much again, Dr. Muda Yusuf.